Today, I'm going to go over the March 2021 San Jose market update, give you a preview of our overall 2021 Bay Area housing market predictions, and I'll let you in on the answer to the age-old question, when is the best time to buy real estate in the Bay Area? Can't wait to show you. Thanks for joining us today. This is Michael Saldana with the Amanda Vang team and the real estate experts. Today we've got a great video, our 2021 March market update, and a quick peek at our 2021 Bay Area housing market predictions. Big thing that just happened this week, interest rates jumped above 3% for the first time since July of last year. Wow. First off, let's get started with a preview of our overall full year 2021 Bay Area housing market predictions. I'm just going to jump straight into it, so for the full presentation with all the data, we'll leave a link for that video in the description and at the end. Here we go. This is what we are looking at for 2021. We predict that prices will go up. This is a reflection of the average growth in Bay Area home equity that we saw in 2020, where the average home gained about 13.4% in equity, netting about $170,000, and we predict that this trend will continue. Demand is high, supply is low, and interest rates are low. The second driving factor is that inventory is down. We are going through something called the Great Reshuffling, where home expectations are changing. With increased availability of work from home, people are becoming more flexible with where they live. Maybe they would rather live 10 minutes further away from where they work in order to put the kids in a better school. Or maybe now that same family needs 4 bedrooms instead of 3 to accommodate for a home office as well as homeschooling. Or maybe you need 2 home offices now. The third major driving factor is rates. They will probably rise as the economy recovers. One of our loan officers just mentioned that this uptick could be somewhat indirectly in response to the sudden surging demand for houses and loans, as coupled with the economy recovering from 2020 and the effects of COVID. So what does this mean? When is the best time to buy? You're gonna kill me when I say this. It's yesterday. Look at this chart. We affectionately call this the Bay Area real estate escalator. Like an escalator in real life, it moves fast, the steps are big, and they're gone before you even know it. When you finally jump on, it's a big step, like a fear-inducing, hold your breath, you're gonna die, don't touch the handrails. The analogy holds very true. It's a life-changing event to buy a house. They're so expensive, it's so hard, it takes so much time, but trust me, it's worth it. Even if you bought your house at the worst time, let's say right here, 2007, 2008, right before the peak of the subprime mortgage crisis. We did a case study on this. If you bought an $800,000 home in Willow Glen, right, by 2011, it would have been worth $500,000. You would have been underwater. You'd have equity, but it's not a pretty picture. Fast forward 10 years later, now it's worth $1.6 million. No joke. Rough rule in the Bay Area is that your house will gain about 50% every 5 years, and 100% you'll double your value every 10 years.
Through the thick and thin of it all, that rule trend tends to hold true in the long term, at least with Bay Area. We're special. We have high wages,
high demand, expensive homes, and low inventory. Back in the old days, this area was called the Valley of Heart's Delight because of how much crops and fruits we produced. Now, we call it the real estate Garden of Eden. So what does this all mean? Maybe your home's starting to feel cramped. Make the move you've been putting off. Maybe it's time to move towards better schools. Or use the equity in your condo and upsize to a single family home. We're seeing a lot of people doing that now. Worried about down payment? Work with us and buy your new home before selling your old home while leveraging every cent of your equity. We have access to some very special programs. We also have a concierge remodeling service. Right now, the hottest homes on the market are what we call turnkey, meaning that they're ready to move in, they're remodeled, they're perfect, there's no changes needed, and with our service, we'll bring in our experienced contracting teams, we'll provide bids, get the work done quickly, and we can even cover the cost of the remodel until you close escrow so you don't have to pay anything out of pocket. Beautiful. We recently had a great success story, a condominium in Santa Clara where we spent about $20,000. We earned a return of about $80,000, completed the remodel in less than 14 days, sold in one weekend, multiple offers, and set a record price for the complex. The homeowner was so happy with us, we exceeded even his lofty expectations. We'll have a video for that one soon. And then the other question is to ask yourself, are you thinking about your first home purchase? Take advantage of the low interest rates and get a good agent on your side to help navigate the competition.
Already in 2021, in this super competitive market, we've had a few buyers win where we didn't even have the highest offer.
One recent example is just a few weeks ago, we competed against 6 other offers in San Jose. We were $20,000 short of the highest price, but thanks to our great negotiation skills, technical knowledge, and precise structuring of our contract and our terms, we were chosen by the seller as the best offer. I mean, how would that feel if you offered on a house, someone was higher than you, someone was willing to pay more than you, and you still won it? What a great feeling. It's almost like an extra $20,000 in your own bank, right? And, to be perfectly honest and frank, the one factor that is driving both of these things are the low interest rates. I heard a funny comment that with interest rates where they are in the 3% range, that it's practically free money. I mean, who doesn't want free money, right? And what's that mean? I mean, you can get money from the bank, right? They'll charge you 3% for the loan, and on average, a home in the Bay Area gained 13.4% equity in 2020, a net amount of $170,000. That's what free money means, and that's why there are opportunities for both buyers and sellers. They say you can print money, but you can't print land. Literally, to build a home here, you need to tear one down first, and there's a lot of people doing that. Yeah. All right, enough of that preview. For all the data and fundamentals that are driving these bold statements, take a look at our 2021 Bay Area housing market update video. All right, let's get started. We're going to take a closer look at the San Jose single-family homes and condominium housing market. With single-family homes, the median list price is $1.298 million, steadily increasing. We have a price per square foot of $753, also steadily increasing, and then a days on market of 7, very low, with inventory of 218. This is single-family homes. One of the coolest things I want to show you is, let's take a look at this price per square foot. So this is a good read of how the market's been appreciating over time. You can see 2018 through 2019, we kind of hovered around this value, maybe an average of about 660, but you can see now we're treading into the territory of about 730, and that's about a 10% increase just in the last 12 months. So that's a pretty big change. Taking a look at the market quartiles, what we'll see is that overall, things are moving. The number of new versus the number absorbed is about equal. So in the smallest quartile, we've got 28 new homes and 29 absorbed. That means 28 new homes came onto the market, but 29 were taken off the market.
I think the biggest telling figure here is that the days on market are all showing very, very short numbers. This represents the last 30 days, and we can actually take a look at the average days on market.
This is going to be the this dark line is the 90-day average. Our 90-day average is still showing 82 days on market, so that's kind of slow, about right. I mean, that's a good, safe number, but with this sudden increase in demand when the new year started, you can see this, the dotted line is a 7-day moving average, dropping down to 35, and then what the actual days on market for the homes that sold in the last month, we're looking at 7 days. That means 7 days means that they listed the home, they had 1 weekend worth of open houses, and then they took in an offer the following week and they sold it. So all these factors combined, we've got a very healthy market. Things are moving very quickly. Prices are going up. Demand is strong. It's good to see that we still have inventory. So taking a look at our overall inventory, we're not quite at the point where we have less inventory than we've seen in 2018 or at almost any point in 2019. And we're right about where we started off pre-coronavirus, which is pretty normal to have low inventory early in the year. And hopefully, as things start to warm up when we go into the summer, we'll start to see more homes come onto the market, and that will help temper down the demand. Let's go take a look over at the condominiums. Taking a look at condominiums in San Jose, you'll see that there's not a huge demand, but it's still a very strong demand. Prices are up, days on market are down, but not to the same extent that we're seeing with single-family homes. So our median list price, $685,000. you see a slow trend up. Price per square foot also slowly trending up, at least in the near term. 617 days on market, 21. This is a lot higher than the 7 days on market we saw with single family homes, which is consistent with what I was saying. Still high demand. 21 still pretty short for days on market when you consider nationwide normal times and so forth. You know, maybe 40, 45 days on market is about right. But in the Bay Area, we've always had low inventory. We always have high competition. So 21 is pretty low, not super low, but that's demand if I've seen it. Inventory also very low, 173 you can see trending down. Let's take a look at these graphs. So you can see over time, median list price is slowly kind of going down. This is consistent with what I've been saying, where even though there's high demand right now, over time, demand has been kind of going down. And that market's kind of going a different direction than single family homes. There's a very interesting effect that we see in condominiums where these three condominiums, 3 bedrooms and 3 bathrooms saw big demand. So we had
7 days on market indicating that they were practically flying off the shelf.
We did have the inventory increase, 20 new ones on the market versus 17 absorbed. But this effect is actually looks like it's spreading down the quartiles. So also in the second highest quartile, we're seeing 14 days on market, which is still pretty short. And also a very large amount of absorption. So 12 new homes, 14 new homes, but 20 that were taken off the market. So that's a big difference. Going down to the lower 2 price points for $598,000 homes and below, the days on market's still a little bit longer. I'd say that, you know, in this area, you're not dealing with that pent-up demand from people that missed out on bids on single family homes. And but as you can see, the absorption numbers are still pretty high. In this lowest quartile, 15 homes absorbed, 9 on the market. That's demand if I see it. What will probably happen is this days on market number will change and show much smaller next month. And then in the second quartile, this 500 to 598, we're looking at 14 new homes and 12 absorbed. So that's about average. And it's interesting because we just had a story that goes along those lines where we had a buyer. They were looking at a home in Sunnyvale. They didn't want to fight the competition here. Sunnyvale has been extremely competitive recently. You know, it's not uncommon to hear 10, 20, 40 offers on a home, but they didn't want to fight with the competition, so we turned them over. We started looking at new construction townhomes, and for a similar price point, they were able to get a little more room inside. Obviously, no backyard, smaller lot, a little higher population density, but they're able to get what they needed, get what they wanted in their price point. We got the bid accepted, and they'll be moving in probably later this year. Very cool. Alrighty, thanks for tuning in, everybody. I hope you enjoyed the video. The world is a crazy place, but make sure you have a great realtor on your side to help you make the right decisions with your most important investment, your home. You're probably wondering why I put this silly slide as the background. Will this market crash? That's a bold statement as far as they go. No, I actually have a great presentation. If you take a look, I talked about this earlier, our full video for the 2021 Bay Area housing market forecast. I'll talk about the factors that are at play with a potential market crash and why we think it might not happen anytime soon, because we've got a lot of equity in our homes, it's different, but we'll see. Take a look at that video, 2021 Bay Area housing market predictions. Thanks for staying tuned. This is Michael Saldana with the Amanda Vang team and the real estate experts signing out. Have a great March. Have a great 2021. Best of luck. Take care, guys. Bye.